I love Stock Pickers Markets because we get to talk about companies, not ETFs, which are boring. Goldman Sachs, what makes them attractive to you?
Goldman Sachs is making a boatload of money. They had a robust year last year. We think they're going to earn a lot of money this year. The stock has sold up very significantly in January, and we think that sets the stage for a much better year. You're buying it under 10 times earnings with a reasonable yield. We think this is a great place to put money. We like the financials this year. Goldman Sachs is one of the better ones for us.
Printing a boatload of money. I'm sure some people in D.C. will be happy to hear that one. Medtronic is not a name that we talked about a lot in the last few years. We used to talk about it all the time. They kind of vanished off the radar, David, but maybe that's actually why you like it.
It is, and they're still one of the top cardiovascular companies in the world, and the last spot feeds into our Medtronic recommendation. The stock has been weak, and they probably are going to have a little bit light quarter because hospitalizations are up so much or were up so much with Omicron. We think as a result, they're going to have a lighter quarter. But as you said, hospitalizations from COVID are now dropping, which means that elective surgeries are going to be back in place in the next 3 to 6 months. And you're getting it at about 18 times earnings. This is a very good growth company at value prices, and it's down because of COVID. And as COVID wanes this year, their stock's going to come back with a vengeance.
Yeah, and you've got TMO as well. This is actually a COVID play in a weird way. So they make a lot of things, but I saw some of their freezers that kept the vaccines at negative 79 degrees. TMO, Thermo Fisher, another name that you like, David.
So they make testing equipment, and that has been a real boon for the earnings. Their earnings were up very significantly last year, but they're also going to be very good this year. It's at about 25, 24 times earnings. This is a company that's growing at 15% or better. This year, we're looking for a barbell approach with some growth stocks and some value stocks. We like value better, but you're able to get some growth stocks at very good prices. Thermo Fisher is one of them. They just had a very, very good quarter, very good outlook. We love management. You're getting it at one of the more attractive prices that you had in some time. They still will do well as COVID testing drops. So this is one, great entry point.
Yeah, and finally, let's talk about Alphabet. I still got to call them Google, of course. I mean, you talk about printing boatloads of money, that quarterly number. I mean, break up another boat. It's a super tanker of cash, David.
We think it is, and the stock is off this year, and that creates a good entry point. We think there's certain FANG stocks that are doing exceptionally well, but the prices are very good. Google is one of them. They have a very good outlook. They are defying odds in terms of lots of industries and lots of sectors are slowing down. They are not, yet you're getting it at 20 times earnings. So great company, very attractive price.